Well, hello everyone. Welcome to Getting Started with Technical Analysis. My name is Barbara Armstrong. I'm a coach with Charles Schwab. I have got Mr. Ben Watson riding shotgun in the chat. I appreciate Ben being here to help us out because today we are talking about the trend. We're talking about moving averages. If you've heard the expression, the trend is your friend, as some end the expression there, others will say the trend is your friend until it ends. And so how do we define the ending of a trend, or how do we recognize the ending of a trend or the beginning of a new trend? So we're going to look at all of these things and more. I appreciate you being here. There's a ton of you here with us live today, and I appreciate those who type into the chat and help bring this class to life, bring some energy to it. So hello to Ray and Josh and John and Kurt and Scott and George and David and Riceburg, who I met on the weekend at the event in Dallas, and Sharon and Kevin and the rest of the gang. Thank you all for being here and participating. If you are not following Ben and I in the land of X, you are missing out, formerly known as Twitter. Ben's handle, Ben Watson CS, my handle, Barbara Armstrong CS. Consider this your formal invitation to join us. Now, just before we get into the thick of things, know that everything that we discuss in this class is for general information purposes only, none of it to be construed as a recommendation or personal investment advice. We will look at a lot of stocks today and know that, we will look at those on the Thinkorswim Paper Money desktop platform, and that is a brilliant place to learn and hone your skills. We are going to talk about options today. Know that options carry a high level of risk and are not suitable for all investors. We're also going to talk about stocks today. So if you're a little nervous about options, no worries. We're going to compare and contrast doing a stock trade and an option trade. We don't recommend using solely technical analysis as your sole means of investment research. Being aware of what's happening with global markets, with our own market, with the impact of tariffs, earnings season, and we're in the thick of it this week. Like over 170 companies of the S&P 500, almost 180 are announcing their earnings this week. So lots going on in the market. So I've designed this to be taught in about a 9-week rotation. We're back at the top. So last week we talked about, an overview of technical analysis. Today we're on to trends and moving averages. And, I've got one little announcement to make. Ben would say it's not so little an announcement, but we're going to do that little announcement and then, review some of the tenets of technical analysis. But our focus today is going to be on trend and on moving averages. And then we're going to go out and we're going to spend a good part of the class looking at examples, because for me, I can do a course anytime. But the reason you come to a webcast is because you want to see it applied live in the markets. And then better yet, you want to know what to do with that information so that you can make some money, right? Isn't that why we're all here? To make a little cheddar, and maybe, you're doing this because you want to protect your giant heap or the assets that you've already accumulated. Maybe you want to grow your account and you don't need the money right now. And you may be saying, Barb, I got groceries, I've got a car payment to make or a mortgage to meet, and things are a little tight right now because prices have been going up. So I'd like to generate some income. And so there's lots of reasons that we want to, look at participating in the market. So, here's my announcement. You can come to schwab.com/events. Like I said, I met Riceburg at the Dallas Advanced Options event this past weekend, and a lot of other people as well. Carol was there and a lot of others. So if you've never been to a live event, it was so cool to see people connecting and meeting one another. And it was a great opportunity for Ben and I to meet and get to have conversations with so many of you individually. If you feel like you're missing out, and here's one case where FOMO is maybe, not a 4-letter word in the world of investing. You may want to, if you live in the Denver area, it's not too late to join Kevin Horner, Ben Watson and the travel in-person team in Denver this coming weekend at the Gaylord Rockies. I will be at the event in Anaheim along with Ben at the end of May, and it'll be another advanced option workshop. Feel free to join us there. And, you know, these are free. You know, somebody asked yesterday, what does it cost to attend these? You're investing your time. And you've got to get yourself there, but we will provide your breakfast and your lunch and 2 days jam-packed with information. And I love them as a client. It's how I got introduced to this world of investing. It's how I ended up with a job as a coach. So don't worry. You know, we aren't actively recruiting if you go, but yeah. And I've established a lot of friendships that I have to this day. So if you've never checked one of those out, I would highly recommend it. Okay, so, you know, one of the tenets of technical analysis is that price moves in trends. And, you know, trends can go one of three ways, right? They can go up, they can go down, or they can go sideways. You know, and the market discounts everything. And by that, I mean that the current price of the stock is the representation of all known collective market knowledge. And so, you know, when an earnings event happens, all of a sudden you've got a big dollop of knowledge about this company. And sometimes we can see pretty dramatic moves in the price of the stock. We've seen, you know, how the tariffs have impacted the stock market. And one thing about the market is it kind of likes certainty. It likes things to be predictable. And there's been a lot of uncertainty and lack of predictability in the markets of late. And that creates a lot of fear. And sometimes when people are afraid, they sell and put the money in their pocket and say, I'm going to, you know, sit on the bench until I'm less concerned and more certain about what's going on. The other thing is that, you know, they'll say that history often repeats itself or looks similar. I like Mark Twain's quote, which is, you know, history doesn't repeat itself, but it often rhymes. You know, it looks similar. And, you know, so being human beings, you know, and we're the ones that ultimately move the market, you know, humans tend to react similarly in similar situations. And so this is what the basis of technical analysis is all about. And we can see it on the charts, you know, and you know, I said to someone on the weekend that I was working with in Dallas, like, would you place a trade without looking at a chart? And his answer was no, and mine too. But, you know, Scott and I kind of grew up in the same world. And there are other people that are very successful traders, very knowledgeable traders. They may have grown up working, you know, grown up in the world of trading. I mean, you know, working for an exchange like the CBOE, and everything was based on probabilities and those types of analytics. And so there's not one right or wrong answer, although I'm still always going to look at a chart, you know, before I place a trade. And so what are some of the things we're looking for? Well, one, you know, trends reflect supply and demand. And so when we have, you know, a ton of demand and not very much supply, then it, you know, that tends to drive the price up, right? Excuse me. Okay, I'm just finding my mute button because I have many things. A delicate sneeze is not one of them, and I don't want to damage anyone's eardrums. But if we have a ton of supply, like all of a sudden there's a ton of nervousness and people are saying, hey, I've done really well over the last year and I think I'm going to take my profit, take my money and run, you know, cue the Steve Miller Band, and all of a sudden there's a ton of supply and everyone's trying to sell, then that can really have a negative impact on the price, because you've got more supply, more sellers than you have buyers. So that uptrend reflects strong demand, downtrend reflects excessive supply. Okay? Yeah. So, you know, if we look at a rally, you know, this is where you've got high demand driving price higher. And they say, you know, sometimes they will call it equilibrium. I call it, you know, hitting the top of the hill. if you're biking up to the top of the hill and you finally get there, you kind of sometimes just want to pause for a minute. It's where that upward momentum tends to slow. And sometimes you can even pull back a bit, as supply and demand kind of reach this equilibrium. And then when the stock tends to pull back, we call that a retracement. And it doesn't necessarily mean that all of a sudden the long-term trend is downtrending, but what it means is the buyers have stopped buying. And what we need to determine is that a short-term thing or a long-term thing? Because you have some institutional buyers, for example, or very large buyers. So think Berkshire Hathaway and Warren Buffett, or think mutual fund buyers. If they want to take a large position in something, let's say they want to get back into the airlines, or they, whatever the company is, they're not just going to go out and say, okay, I'd like to buy $20 million today worth of whatever the stock is. They're going to buy some, and then the price comes up, and the price comes up. And then they're going to stop buying for a few days, and the price pulls back down, and they're going to let the price come back down a bit, and then they start buying again. And, here we had this big jump in the price, and then, it could be that institutional buyers stopped buying, could be retail buyers started taking profit. They're saying, hey, if I bought it down here when it first broke out, I may say, hey, I'm up, 30%, 40%, I'm going to take my profit. And so then the price comes back down, came back down to this previous resistance level, and then took off again. So, we may have a short-term pullback within a longer-term uptrend. Okay? Yeah, Riceberg is with me. He looks at the charts. Yeah. and Ben is Switzerland. Yeah. So, pullbacks. So we've covered these. And, when we say uptrend, we're going from the left side of the chart over to the right side of the chart. And how can we say this is an uptrend? Because we've got like a bunch of peaks and valleys here. But if you, get out your drawing tools, and as you guys know, I like to draw on the charts, but, we've got a low here, and then the next low is what? It's a higher low. And then the next low, higher low. And this is on a longer term trend, right? Because if you are looking day to day, you could say, well, that was a higher low, that was a higher low, that was a higher low, and then we had a lower low. So, others might call this a bull flag type continuation pattern. But the net of it is we have a series of higher lows. We also have a series of higher highs. And then if we, start drawing lines to hook all these together, the trend is uptrending, isn't it? Yeah. And so what's our expectation is if we see this pullback, and we're going to we spend an entire class talking about flag patterns, but when we see something that's come up and then pulled back for a few days, when it starts to go up again, we might say, oh, if we wanted to do a short-term trade, we're going to enter here when we have a close above the high of this pullback low day, and we'll trade it until it stops going up. And then it pulls back again, and we could do another. Now, what would a swing trade be? And Brent Moore's just taught long options and talked about swing trade. A swing trade would be saying, I'm going to just trade this back up to the previous high within an ongoing uptrend. Okay? So there's lots of things we can do once we identify a trend. Okay. And George is saying, well, it depends on the time period of the charts. And, you can identify trends in any time period. It can be, a chart that's reflecting minutes, which I tend to look at just after an earnings announcement, to just see kind of what's going on. It can be chart that's 3 months, 6 months, 9 months, a year, where we tend to do one day. It can be a 3-year weekly chart. It can be a 20-year monthly chart. And we can still identify these trends. Now, I like that they put red dots on here to represent, the downtrend. But, we're kind of seeing the opposite type of pattern, right? We're seeing a low and then a lower low. And then, this is on our intermediate trend, and then another lower low. And our high is followed up with a lower high, and then another lower high, and a lower high. And, if we connect the dots, so to speak, and we could do this on both, and we're going to see some of these on the charts. NVIDIA is actually a good example of a chart that looks very similar to this right now, where we have this range and it's moving fairly dramatically within the range, but overall it's still downtrending, isn't it? And downtrend, and I realize, there is a language to the world of trading. And although I do my very best to speak in English, when you hear bearish, some people in the beginning, they don't know the difference between bullish and bearish. Bearish means it's downtrending or falling in value. Bullish means uptrending, and here's our lower lows, lower highs, and the expectation is that the price might continue to fall. And so, if you are a stock owner, and the only tool you tend to use is the purchase and holding of stocks, whether it's for a shorter term or a longer term. When you see this trend, you may say, I'm going to take my money and go sit on the bench. Now, if you use options, then there are ways to profit as a stock falls in value. And that's really what got me interested in this. After 2008 and 9, when I got clobbered, I knew there was a way to make money as the market was falling, as this kind of pattern was setting up, as it did in dramatic fashion in what is now known as the Great Recession. I just didn't know how to take advantage of it, and I wanted to figure it out. Yeah. So, and then when do we say the downtrend is complete? Well, when the price, this pattern changes and we start seeing higher lows, and higher highs. And we're going to look at some of those on the charts today too. Okay. So we've done uptrending, we've done downtrending. So yeah, the market provides opportunities to learn. And you can choose to learn or you can choose to ignore them. And if you choose to ignore them, chances are the market will provide you with another opportunity to learn that same lesson. And so I'm trying to learn quickly so that I don't, lessons, they can be expensive and you don't get to choose the price of tuition, right? It just does, the market does what it's going to do. Yeah. Yeah, somebody's asking about the SPX, and we'll look at that. So I just have a couple of additional slides, and this is really the only class I teach where we go through some slides, but someone put a lot of work into creating these, and I think they can be a really nice tool. So sideways, or I like to think of it as going a whole lot of nowhere. But it's a neutral trend. And, we've had long periods in the market from 2001 to 2011. We basically came back up to where we'd been. We went through 2008 and 9. They called it the lost decade. And when I talked to somebody in the financial space and they said, yeah, we call that the lost decade. It's like, well, sweetheart, I don't have another decade to lose. I don't know about you. But so I want to figure out how I can make money when this is happening. Because it happened overall, and there were ups and there were downs and there were sideways. 2015, at the end of the year, the market had gone up like 1%, a very small amount. And so if you understand how you can take advantage of this, that can be a powerful thing, my friends. Okay, and what are we looking at here? Well, similar highs and similar lows, where it's trading in this range. And you may say, well, these are pretty dramatic moves, and you're right. And we could trade those. You know, we could within this. And then it's kind of like, once this has happened once, twice, 3 times a lady, could you, the next time it comes down here, could you say, you know what, I'm going to buy some stock? Or maybe if you have a smaller account, you say, I'm going to buy a call, which can be beneficial if the stock goes up. And then when it comes up, when it comes close to this previous line, you say, I'm going to buy it. And when it gets here, I'm going to sell it. And then I'm going to wait till it comes back down, and I'm going to buy it again. You know, when it bounces. Now, if you had bought on this bounce here, you might have been kind of holding your breath. And then when do you exit? Because if you said my target is up here, it didn't come all the way up here. So when it started to roll over, you might have sold it maybe here. And then it comes down, you know, well, on this one, if you'd bought here, you know, you'd have hit your target, and then it kept on going. And are you going like, oh, darn, I shouldn't have got out? Like, let's not be greedy, people. But we can take advantage of stocks that are moving sideways in a range. You know, and when do we consider the sideways trend to be broken or over? Well, if it breaks to the downside, that's one example. Or like we've seen recently with Dollar Tree, which we're going to look at and actually do an example trade. From September to April, this is what this stock did. It went a whole lot of nowhere. Well, it went from about 60, I think, to $77 a share. That was the range. And it's recently broken out. Okay. So, you know, and could we use options here? We could. We could buy a call, close it out. When it rolls over this way, we could buy a put. Or if you're trading more conservatively, you could do something called a short put vertical. When it's here and when it comes up here, we could close it out and then put on a short call vertical. Or if you want to get fancy and do both of them together, I call this a credit spread sandwich. When you put a short put vertical and a short call vertical on at the same time, that's called an iron condor. Okay. And with an iron condor, as long as it's like, here's one slice of bread at the top and one at the bottom. And as long as you don't get any squishiness happening, as long as it stays in the middle, you're a happy camper. You want it to continue going nowhere. Like, how cool is that? That we can place a trade and have a stock go nowhere and potentially make money. Now, if some news hits the market and it's a particular stock and it gaps down, we can also lose money. Or if some news comes out of a merger, or they come, you know, it's a drug company that got some new miracle drug, you know, we could lose money. You know, there's always a downside, right? There's risk. Okay. Now we're going to talk just for a minute about trend, and then we're going to spend the rest of our time on the chart. So, you know, what's the advantage of using a moving average? Well, you know, we use a moving average because it kind of leads the eye. You know, when we look at this, it's pretty obvious that this is uptrending. And this is a 30-period simple moving average. And it just kind of smooths out the price fluctuations and leads the eye. Now, if you use a 10-day moving average, it's going to be a lot more wiggledy-jiggledy. And you know, to use a highly technical term, and what do I mean by that? Well, it's going to track closer, so it might look like this, because it's only using 10 days of information, where this is just kind of plodding along. And then if you use something like a 200-day moving average, it may be like way, way down here, because it's going to react much more slowly. So it can offer a stronger trend signal, but it's going to be slower to change. Okay? Where, you know, the faster moving average is very responsive to price, because you're only using, you know, if this is a 10-day, you're only using 10 days worth of information versus 200. So it takes a lot more down days or up days to change this average when you're adding one down day into a group of 200 days versus 10 days. Okay. And you'll see coaches using different averages. I use the 10 because we place a lot of short-term trades in my classes, and the 30. Others will use 20 and 50. And why do I use 10 and 30? Because the first coach I followed, that's what they did. And I did what they did. And it's continued to work for me, but just, follow your own heart and what works for you. So, we look at longer term as being defined as something longer than a year. Intermediate term is, 3 months or so to a year, and short term would be, less than 3 months, days to weeks kind of time frame. So within this longer term uptrend, we can see some intermediate term fluctuations, right? So you want to trade with the trend that matches your objective. So if you're a short-term trader doing swing trades, you may not care about a 200-day moving average, but you may want to back the truck up, like I like to say, and look at the longer-term trend to just see if that trend is rolling in your favor as well. Okay, so let's get out now and look at some charts. So the first one I wanted to look at was Dollar Tree, because we can see that this was downtrending. And remember, the trend is your friend. So, could someone have been trading this using, options to the downside? They could have. And then it got to September and it started going where? A whole lot of nowhere. So did we continue to see lower lows? And I want you guys to be typing in as we look at some of these charts, just what the trend is. But here we had a high, lower high, lower high, lower high, lower high. And then we had a series of lower lows along the way as well, right? But then we got here, and this was a lower high, but now we had a similar low and a similar high, and then a similar high, similar high, similar high, similar low, similar high, similar low. And, we actually traded this in our trading a smaller account. We did some of those, what we call the credit spread sandwiches, where we sold a short put vertical at the bottom and a short call vertical at the top, and took advantage of that sideways trend. But now what's happened? Yeah, Riceberg, you've got it. It was downtrending and then a sideways, but now it has broken out. And so where might we expect it to go? And here we've got our 30-day moving average, which was pretty smooth. And then our 10-day moving average, which was a little more responsive. And here's our 200-day, feeling like a condor just kind of cruising through the sky, right? Yeah, so, but for a long time, this was below the 30 and below the 200. Now the 200 has finally caught up, and it's now trading above. And so if we wanted to buy some shares of this stock, this has been trading in this range. If we round that up to 61, from about 61 to 77 for many months. And so a technician might say, well, my expectation, if it breaks out, and often when something will break out, it'll break out and then come back to retest. And it's done that. And now today it's moving up again. So if we wanted to do this as a target, because we'd like to earn some income, maybe if you're Ben, you want to go to Disneyland. He's a big fan of Disney. So we could say, I'm going to take this 77 and add $16 to it. And I'm going to make my target 93. And so I'm going to buy some shares today. Now, where might I put a stop? Well, I might say, well, it came back to retest once. It could come back again to this 77 level. So I'm going to put a stop 3% below that 77 level. So I'm going to make my stop 74.69. and I'm going to make my target 93 based on this range that it was encased in for so long. Yeah, and like Riceberg is saying, like, how to identify when the trend has changed. And if you want to wait for a little more confirmation, there's no harm in that. You know, because you don't have to get, like, you might be saying, like, wow, Barb doesn't know her stuff because she should have bought it back here on this day. Like, now we're paying $80. If we'd bought it on this day, you know, it closed on that day at 67. And now we're paying $13 a share more. But how were we to know that this sideways trend, you know, was done? And this stock, you know, doesn't pay a dividend. If you come here to the trade tab, dividend yield zip. So it's not like, you know, now if you own the stock, could you sell a covered call against it? We could, but we're talking about trend here. Yeah, and we could use the Fibonacci tool also. And we spent a whole class talking about the Fibonacci. And I actually, Riceberg, great minds think alike. I actually came and looked at the Fibonacci on this. So if we come from the top to kind of the bottom here, our 161 target on this would be 85.88, not 93. And so a Fibonacci would absolutely be a tool that we could use. Yeah. Okay. So we're going to come to our trade tab. And if we wanted to do this with stock, we're going to come here and we're just going to say we want to buy. And, you know, this trades 15. Oh, it's traded over 1.5 million so far today. We want to buy custom with an OCO bracket. And this is like a $490,000 account, you know, so we could probably buy 25,000 shares. We could buy, you know, 300 shares and, you know, be appropriately position sized. Oops, 300. And then we're going to make our target here 93. And we're going to make our stop 74.69. Now, what if you said, you know, Disney is awaiting, this could take a while, and you're right, it could, but we're going to put this one in anyway. This is a stock with a target. And we're going to send that in. So, you know, we want to buy 300 shares because we're now bullish. We have a target placed $12 above and a stop loss placed $6 below. Now, can we change our mind if it goes up to, say, that 88-ish level and it starts to pull back? Could we take our profit and close out the trade? Sure. Can we move our stop up as it continues to go up? Yeah, we can do that too. So it's not a set it and forget it. Okay. Now, what if you're saying, yeah, this is really great, Barb, but like I'm just starting. I don't have, you know, a ton of cash to be buying 300 shares. Is there a way I could use an option? Well, here's our recent high here. 85.55. Oops. So could we just put in a short-term target around this, sorry, 85, call it 85.15, buy a call and say when it gets up to 85.15, I'd like to sell that call. Well, we could do that too. Let's see how much it would cost us to buy a call. So if we come out here to the trade tab, and this just offers monthly. Oh, no, it doesn't. It does offer weekly. So let's say we come out here to June, because we've got lots of volume on these contracts. And if we said, okay, I'd like to buy this 85 call, could we do that? Sure. And then we're going to we're going to buy custom with an OCO bracket. We could put our stop at the same price, but we could just say we want to sell this when the price of the stock gets to 85. And I've got a conditional order here. So that's 85. And so we have a shorter term target on that. Or, you know, if this starts going sideways, and we know that this stock has had a tendency to go sideways in the past, you know, time decay is not our friend. It's not like owning a stock. You know, come June 20th, this could expire worthless. But so we're going to say if this gets to the point where it's worth half its value, we'd like to close it out because something is not going according to plan. So we'd like to close it out when it's lost half its value, or more interestingly, if it goes up to that $85 level, which is about $4 away from where it's trading now. So we're going to put that in our long call group, and then we can compare this to the stock position. And it's not really apples to apples because we're not risking the same amount of money, but we can still have a conversation around it. Now let's look at some other charts. So, and what I want you to do is just type in what trend you see as we're bringing up these charts. So Kroger, this is a 1-year chart. We hit a low here of 49, a recent high of 73. And you can see there have been pullbacks along the way. But overall, how would you characterize this trend? You know, it's uptrending. And if you didn't own a position, it looks like we bought some stock in Kroger back here. But if you didn't own a position, might this be considered, you know, by some traders, a potential entry? Yeah, you guys have got it. And I know that there's a bit of a delay, but David and Riceburg, yeah, we've got an uptrend. How about NVIDIA? Well, spoiler alert, I already talked about this one, right? You know, although this stock has been like the belle of the ball, and if we look at a longer term time frame, here's a 5-year weekly. Like, it's extraordinary what this stock has done. So longer term time frame, uptrending. But, you know, since January of this year to date, yeah, downtrending within this range, within a range. Yeah, Lashane, you've got it. How about AMD? You know, here's a 6-month. Let's go back to a 1-year. Like, this thing's been on the struggle bus since, you know, this recent high here back in October. It's below the 200-day moving average, and it's kind of stayed below this 30-day moving average, hasn't it? Now, some might say, you know, are we seeing a bit of a change? Because we had a support level here. We're going to talk about support and resistance next week, but this has been downtrending. But then, and we saw a lower high, but now we're seeing a similar high. So high, similar high, and low, higher low. And this is how, and we do spend a whole week talking about tenet patterns, but could this, you know, be the beginning of a change? Let me just... Or could it turn around and could the downtrend continue? And so what a technical analyst might be looking for is a break above. So looking that it's been able to bust through this range at around the 97.50 mark. And then where might the next, you know, hurdle be? Maybe up here around 114. But so far, the jury's still out. We have this consolidation pattern happening. How about Tesla? You know, another one that gets talked an awful lot about in the press. So we had this dramatic uptrend here, right? What would we say the last 6 months? I mean, it lost 40% of its value in, you know, not a New York minute, but pretty quickly. You know, but now it's come down here, high, lower high, lower high, lower high, lower high, lower high, and then higher high. And then low, similar low, similar low, similar low. You know, so now it's kind of consolidating. And so some people might be saying, like, I'm pretty bullish, Elon's going back to Tesla. Well, it hasn't been able to bust a move through this similar high. We don't have a new higher high, do we? Yeah, so some might say, hey, I see a double bottom, but it's a double bottom without a breakout. So what do? We might wait. How about Crocs? You know, so Crocs was on the struggle bus too. A lot of, you know, downtrending, trying to recover, down again, trying to recover, and then it started, you know, careening downhill. But since this earnings announcement back at the end of October, you know, this seemed to create a resistance level, you know, where we had a high, similar high, similar high, similar high, similar high, like I'm whispering in your ear. And again, support and resistance, you know, our ranges, kind of a similar type high, came up and kissed the ring again, and similar lows here. So could this be another stock that's range bound? Yeah, but can we trade something that's range bound? It's got potential. How about Delta? Yeah. So, you know, Delta seemed to be doing not too badly here if we looked at it from August through, you know, the end of January. And then it just got really clobbered and it's continued to fall. But, you know, so we saw again, high, lower high, lower high, lower high, lower high, lower high. But what are we seeing now? We're seeing some higher lows. And even though we're still seeing lower highs, could we be setting up a bit of a wedge? And, you know, and we might just be patient and see which way it breaks out of this, but could things be starting to change? How about Starbucks? Do you see? And we're going to start seeing a lot of these where we had this, you know, intermediate term downtrend, and now we're seeing lower lows, even though, sorry, we're seeing higher lows, even though we're still seeing lower highs. Excuse me. And so some might just say, I'm just going to wait. I am just going to wait. How about Etsy? I'm going to wait and see which way it breaks. Well, it's a good thing we're almost done. But, you know, and again, here, you might say, here's a series of lower highs, and it was trading in a range. If I duplicate this, and it's coming up close to this high. Okay. So, and again, if this starts to roll over on earnings, could we place a bearish trade until it comes down and make this our target, this line? We could. Now, it could break out above this range, in which case we might wait to see if it comes back to retest. But drawing lines on these charts, in addition to having, you know, a moving average, can help you see things that you might not have seen before. Right. So that is our time, guys. We are up. I want to thank Ben Watson for helping in the chat, the guys behind the scenes for helping bring this to life. And I want to thank each and every one of you for your participation here. If you could hit the like button, it will help move this up in the trading in the YouTube algorithm so that more people can find this content. And we would appreciate that very much. If you would subscribe to this channel, if you haven't done so already, there's a button in the bottom right corner of your screen. So you can hit that subscribe button. And then don't forget to follow us in the land of X, Barb Armstrong CS and Ben Watson CS. It would be great to see you there. So guys, that's a wrap. Up next, I'm not sure. In all honesty, of what's up next, but there's lots of great content still to come. I think it's Mike Fairborn talking about swing trading. So I hope you will join us for that. And I'm back tomorrow teaching trading price patterns. So a good fit with technical analysis. And Ben on Wednesday mornings teaches a class called Trading Index Options. I'm going to be hanging out in the chat tomorrow morning, but he is doing some extraordinarily cool stuff in that class. It's trading indexes, sorry. And so you're going to want to check that out if you haven't done so already. So that's a wrap for today. Thanks, guys. We'll see you soon. Bye for now.